This is the easiest Forex trading strategy you will ever see. Alright, so let's get right into it. As the title says, in this video I will share with you a very cool strategy that is super easy to use and even a beginner would be able to use it. The reason I decided to make this video is because recently I got some messages from people that just started trading and they were like, hey man, can you publish a strategy that we could also use, a strategy for beginners? And I was like, okay, I actually haven't done this in a while, and here it is. Here is this strategy video that I had in plan, and finally I am doing it. So let's get right into it. We only need one indicator, okay? We need the 50 EMA. So you go right here, you click EMA and you select moving average exponential. After that, you go on its settings and you make sure you select the length at 50, and the style you can choose whatever color you want. I have it set to red. After that, you click OK and we are all set. I'm gonna keep it super simple. We look for buys when price is floating above the 50 EMA, and we look for sells when price is trending below the 50 EMA. Okay, because that's why because that means that we basically look for buys when price is moving in a uptrend and for sells when price is moving in a downtrend. Okay, we are basically following the trend using the help of the 50 EMA. Now, what do we look for when we want to enter? We want to see a retracement. For a buy position, we have to see a retracement towards the 50 EMA. We want to see a touch like we get here, but we don't want to see a full closure like we, for example, have here. If we see a full candle closure below the 50 EMA, we will switch our bias to sells and we will stop looking for buys, okay? And it's the exact same opposite for sells. We look for a sell when we get a touch on the 50 EMA after a retracement, okay? But we will disconsider looking for a sell if we see a full candle closure after the above the 50 EMA like we have right here, for example. Okay, these are the rules, super simple, super clear. Now let's get into some example. But before we do, I wanted to let you know that if you want to see the trades that I am taking every single day, you can do that by joining my Telegram group. The link is down below. You can go ahead and join and you will literally see the trades that I take every single day. Okay, so make sure to join if you are interested. Now, let's get into some examples. I'm not going to scroll back in time. I'm just going to use recent price action. Okay, I'm on the hourly time frame on USD/JPY. Of course, you can do your own backtests on different time frames as well if you want to scalp with it, if you want to swing trade with it. But for this video's example, I'm going to use USD/JPY on the hourly time frame. So let's look for some possible examples. Okay, check this out right here. I already found a example, and I'm going to use the bar replay. So check this out. Right here, we are now floating below the 50 EMA, and let's wait for a touch. Okay, we have a touch, and we also have a candlestick pattern. That's the last confirmation for us to get into a trade, the candlestick pattern, and we have a bearish engulfing right here. Okay, so after you enter, the stop loss would be right above the most recent high. And now I would use this structure right here as my take profit. Okay, this zone of support, which would give me a 1-to-1 risk to reward ratio, which is pretty decent. Okay, and this is a winning trade. Okay, let's exit and look for another play. Let's see if we get another play. Here, I mean, this is not a candlestick pattern, so I wouldn't have entered. Here, there is a touch, but no candlestick pattern. And now we would look for buys because we are trading above, back above. Let's look here to see if we have some examples. Here again, we have a touch, but no candlestick pattern, so that's not a entry. And see, here we would have had a loss if you would have entered straight after the touch. But because we wait for candlestick patterns, we will filter some losses, and overall we will have a bigger win rate. But of course, we will also have some losses here and there. Okay, with every strategy you use, you will always have losses. Okay, this is something normal, and it will always be part of the game. Look, I have another example right here. Okay, and this is a winning example. So check this out. Floating above, we are looking for buys. Boom, we have a touch. And now let's just wait for a candlestick pattern. And boom, we have a bullish engulfing. So we would place the buy right at the closure of the candle, stop loss right below the most recent low, and take profit. We could use this high right here, which is a 1 to 1.5 risk to reward ratio. And as you can see, the target was smashed. Okay, So another very beautiful setup. Let's just exit again and see if we have one or two more examples before ending the video, because I want to keep it super simple, super straight to the point. There's nothing complicated about this strategy. You know, it's super simple. Look, we do have some examples here. So let me show you how I would have played it here, because this is a bit tricky. So now we are floating below the 50 EMA. Here we were looking for buys, but because we came down and we also closed fully below the 50 EMA with these candles here, now we are looking for sells. So let's wait for a touch, and boom, we have a touch. Now let's wait for a candlestick pattern. No, that's not a bullish engulfing, because it didn't close above this, below this candle. That's not a bearish engulfing, sorry, not a bullish engulfing, because we are looking for sells. So let's continue. Still no bearish candlestick pattern. Let's just wait for another touch. And now we have another touch. And we have a doji, okay? So this doji right there is a candlestick confirmation for me to take the sell. I would place a stop loss above this high in this situation, and the take profit would be this low right here, okay? So let's see. Oh, we almost got stopped out, and oof, this was a very close trade. Almost got stopped out, but then the take profit was smashed, okay? And as you can see, these are literally recent examples, okay, from this week. So this strategy is really easy to trade. It's a super simple to trade strategy, and the rules are very simple. It's nothing hard about it, you know. Just gotta stick to the rules and make sure, of course, you gotta make sure to use proper risk management, because without a proper risk management plan, no matter how good the strategy is, it will be pointless. And here again, this would have been wins, but we wouldn't have entered because we didn't had any. I mean, on this one we would have. Check this out. We would have entered here, and let me tell you why. So check this out. Right here we wouldn't have entered because although we had a touch, we had no candlestick confirmations. But here, check this out. We have a touch, and we also have a doji candle. So for me, a doji candle is a strong candlestick confirmation. We would have entered here, stop loss right below, and take profit the next high in this situation because it's a buy, and this would have been a very cool risk to reward ratio trade. And as you can see, it would have been a pretty fast take profit. All right. So that being said, I think I covered a lot of examples. Of course, there will also be losing trades with this strategy, as I said. Let me try to find a losing example. Let's see if I find a losing example. Yeah, check this out here, for example. Here I would have entered a sell because look, this candle right here with this long wick, okay, that for me would have been a pin bar, a candlestick confirmation, and I would have entered it right here. I would have entered it right here on the candle closure, stop loss right above, and take profit would have been here. But guess what? This would have been a stop loss. And like I said, losses will also be part of this strategy. Okay, there's no way around it. But overall, I really think this is a very cool strategy because it's super simple to use and it's also pretty efficient if used correctly. That's my opinion. Now, make sure you guys are subscribed to not miss out on future content like this. If there's any questions, feel free to drop them down below. If there's any feedbacks, any ideas you have for me, make sure to leave them down below. And also feel free to share this video with your friends. And I would really appreciate it if you would also like it, okay? And to be fair, that's pretty much it. Let's just do a small recap. We would look for buys if price is trending above the 50 EMA, and we would look for sells if price is trending below the 50 EMA, okay? Once we see the 50 EMA getting touched, we would look for a candlestick confirmation for us to enter the trade, all right? And yeah, I think that is pretty much it for this week's video. I really hope you guys enjoyed it. And as always, I will see y'all in the next one. Goodbye.